Morning, Steve Freed in Chicago with the morning grain comments. Well, I'm back in the saddle again, and looks like prices have bounced a little bit, at least for beans and corn. Some people think that after the USDA stocks report, the numbers weren't quite as bearish as people thought. There's also some thought that maybe at the beginning of the month, new money came in and started buying commodities, looking at maybe corn and beans as cheap. We also are dealing with the same scenario with record demand for corn and beans and at the same time record supply. Beans are 6 cents lower overnight, and I think the market is kind of taking a setback because a private estimate came out pushing the soybean yield to 52.5. Their previous estimate in September was 50 and the government's 50.6. That could add 160 million bushels to the carryout and could put pressure on bean prices. USDA said the bean harvest is 26% done. That's a little bit below what I thought they would say, and 27% average. The crop is still rated 74% good to excellent versus 64 last year. So there's a big, strong support that we're going to see a bigger crop on the October crop estimate, and that could offer some resistance to prices. Over in the corn, the same group estimated the corn yield at 175.2. They were at 175.6, and the government's 174.4. Some really good analysts are down to 172, 173. So yields are not coming in quite as high for corn as they are for soybeans. Still, we have a big carryout for next year, and we're still looking for corn to stay within a particular range. If we get too low, farmers aren't going to sell, and if we get too high, they'll probably sell too much. Corn harvest is also 24% done versus 27 average, and the ratings are 73% good to excellent versus 68. So in general, good news, bad news as far as harvest is concerned. It's a little slow, and that might be a little supportive, but you got a lot of the harvest still to go. And especially in the West, if we start running out of space, you could see some forced selling. Cash basis levels both for beans and corn at the Gulf and internal domestic markets are also weaker in anticipation of this movement. The wheat market, wheat is wheat. We're in a trading range. We might be in the middle of a trading range because we just have so much wheat in the world. We got 43% of our 2017 crop planted versus about 45 average. India and Egypt are out there looking to buy world wheat, but mostly non-U.S. South America, the weather looks improving. 4% of the Brazilian soybean crop is planted versus 3 average, and the first corn crop, 25% planted versus 21 average. And we're still looking for maybe a little less bean acres in South America and maybe a little bit more corn acres because of the higher corn prices domestically versus beans. Traditional funds yesterday, big buyers of beans, meal, and corn. They sold a little bit of oil and they sold wheat. So they're continuing to be long a little bit of beans, long oil, they're short corn, and short a record amount of wheat. So we still stay in this broad trading range. We'll see how the yields come in. We'll see what the government says on October 12th. Outside markets, you got the dollar stronger, and you've got crude and most commodities are lower. And I think there's some new concern about European impact on the economy because of Brexit, and also some concern about some German banks and their outlook. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.